Are we live? I believe we're live. Hello, everybody. Happy Tuesday. Oh, I was about to say Monday. We had Monday off. I hope you all had a nice long weekend. We got the markets back open today, and the September volatility, as promised, is here. Everything opened up largely red today, but it was initially bought the lows of the morning opening. So, an interesting spot we're at now. The Prospero signals are still down in the dumps. The QQQ and the SPY are both quite low. SPY is currently at 0 in net option sentiment, and QQQ is at 4. But as everybody gets on into the stream, welcome back. Hit that like button if you enjoy the streams. If you're watching on YouTube or Twitter, X, follow us on X, subscribe on YouTube. We appreciate you guys watching the stream. We have a bunch of great topics. Happy and excited to get into them today. As always, if you're watching this, leave us a live chat and we can answer any of your questions about single stocks, the macro, business, AI, whatever you have questions about. So without further ado, I'll take you guys through some of the topics. Good morning, Mario. Thanks for saying morning in the chat. Welcome back. Good to see you here, a familiar name. And this is an important stream today because the markets are in a precarious situation. So it's going to be very useful information here. Okay, so today we're going to get into, like I said, the market opening lower, but an initial buy the dip as we've seen so often recently. So does that tell us anything about the state of investors? Is everybody still excited to be buying dips, or is that not going to last too much longer? And we had some news about the tariffs over the weekend. A federal appeals court ruled that they were illegal, but they gave a time frame until October 14th, so not too long away for the Supreme Court to take a look. But honestly, it's so confusing with all this tariff stuff. So I have to ask George, like, how likely is it that these tariffs are reversed? What would that mean if it is done? And then with this uncertainty just being added to the mix, is that going to increase the volatility that we were already expecting for this September, which, if you guys don't know, September is historically the weakest month in markets. So, and today is the first day of trading, and it is living up to its historical precedent. Then we're going to get into PepsiCo, which got a boost from Elliott Management taking a $4 billion stake in the company. And Elliott is one of those active investment participants in the market, and they seem to be well respected. When a company is announced that Elliott is taking a stake in them, it usually jumps off that news. But I want to ask George, is it meaningful for him when he sees an Elliott headline coming out where a company is getting bought up by Elliott? Like, does that make him take a double look at the company, and does it change his perspective on them when he sees that headline? And let's see, PepsiCo was up 4% this morning in a red market, so we'll see if they are still up there now. PepsiCo is currently up 2.33%, so a little bit lower, but still outperforming the red market we're seeing today. Let's see, I actually didn't mention which indice is leading. I feel like that's could be useful info on a day like today. So the QQQ is down the most, and the Dow and the Russell are leading, still down almost 1%, but down the least today. Another company I want to get into is CYTK, ticker. Cytokinetics is the company. Another company not playing along and being up today, although the market is quite red. They announced that a drug that they are developing for heart disease was more efficient than let me get the terminology right, than the standard of care currently. And it had caused their stock to pop 25%, but actually right now they're up even more. They're up 36% today. And the only reason I'm bringing up a company like this on this headline is because their Prospero signals had looked very good, and I've seen them on the short-term bull list a couple of times recently. But after a company makes a huge move like this, I always like to ask George, like, is now the right time, like when they're making such a large move upwards, to, if you're excited about the story, to purchase or invest in the company, or should you wait for a little bit of a pullback, especially with the market weakness that we are anticipating? I have a secret stock for you all, so you're gonna have to stick around till we get to the story. And I'm not gonna I'm not going to reveal right now. I'm going to make you all wait, but this stock, which I guarantee you, unless you came across this story too, like me, you would never ever guess. It is beating Palantir and Nvidia in performance over the past 5 years. And once you hear this company, you're going to be like, I cannot even believe that is true. But the data back it up. I can guarantee it is true. And it was up quite a bit towards the end of last week after they had their earnings. So if anybody has any guesses, feel free to guess in the comments. But I would be very surprised if any of you got this company. We're going to talk about Spirit Airlines filing for bankruptcy for the second time this year, which I didn't even know companies could file for bankruptcy like so quickly and multiple times. But not looking good for Spirit Airlines. Is it a sign for the whole travel airline industry or just a Spirit problem? And then is Spirit Airlines going to be a thing of the past soon? I remember, I believe JetBlue was trying to buy them, which got um, regulated against, but maybe JetBlue will get an even better deal on Spirit now since they're in a worse state. A couple more stories to go through. So if we do get this market pullback in September and it is aggressive, which AI stock will be George's first that he will go to and be like, okay, there's been a dip in the markets, but this is a great company, and it's in the AI sector that has led the market for years and years, and we expect it to keep growing for years. So which is the first on the list of those AI stocks where he's going to be like, all right, I got to buy the dip in this company while there is one. Then STZ, which is Constellation Brands, who makers of Corona and Modelo and several other products, hitting 52-week and 5-year lows after weak 2026 outlook. Is it time to buy the dip in a company like that has already kind of building up upon the stocks that George was talking about recently of he wants to buy the bigger dip in stocks like Lululemon and others and United Health and stocks like that. So STZ was down even more today. Let's see if they are still down there. Yeah, so they're down almost 8% today and hitting multi-year lows. Um, and if I'm not mistaken, I think Modelo is the #1 beer in the USA, which is a little bit surprising. But I remember hearing stories about that. So time to buy the dip in STZ or not. It's Dillard's, right? Crazy? Not quite, Mr. Joseph Morrison, but thank you for the comment and the guess. um, Last thing I want to discuss on the stream today is gold breaking out to all-time highs. And the gold chart is pretty interesting because it had multiple tops at the same level over the course of the past like 6 months almost, and now officially breaking out of that area. And I saw a lot of people were getting excited for that breakout, but typically I think when gold is doing well, it's because people are expecting the market to have trouble. So um, does George feel that way? Is he looking to buy gold into this momentum? We always talk about how some of the favorite investments of the Prospero signals are kind of investing where the momentum is. So will that be in gold? And then looking at that chart, we don't typically talk about charts too much, but this one I think is a particularly interesting one. And I just want to get George's opinion on that. And then at the end of the stream today, we'll do the model portfolio update as always. Going to be very interesting to see where the market trades over the course of the next hour or so. I see actually it's kind of trending back lower now after the buy the dip open. So we will see. And the VIX is at 1852 currently, up 15% today. So the VIX is highlighting the volatility that we are seeing in the markets. But without further ado, George will be in here any moment. Let me actually look at Bitcoin right now because Bitcoin was in the green, even though the markets were in the red, although Bitcoin has kind of lagged the markets recently. So yes, Bitcoin is up to 0.75%, trading over $111,000 again. We can look at the Mag 7 stocks. Apple red, Amazon red, Google red, Meta, Microsoft, Tesla red. Let's look at NVIDIA. NVIDIA is also red. So yes, all the Mag 7 down in the red. We've had over 280 people tuning in already. Thank you for hanging out with me so far. Hopefully everybody hit that like button. I will give our YouTube people a like myself. I'll help you guys out. Let's see if we can hit 20 today on YouTube. That would be something special. We've actually been getting a lot more views and likes and engagement on YouTube and Twitter for these lives. So we said at the end of last stream, but I'll say it in the beginning. Thank you. I really appreciate it. George and I both do, but it's really cool to see the streams starting to do well. Glad people are enjoying them. We'll see. Anybody got any questions while it's just me and you guys? Did everybody read the Sunday newsletter last night? I saw George join up. It looks like it's working. We got the camera.
Camera issues, but now we are good. Sound
All
good?
right. Perfect. And it's perfect timing because I took everybody through the topics. We already thanked everybody for liking it up because I know they're doing that because they're excited for the stream today. But we're seeing the market. So I set the table, but I'll just, since you're in here now, I'll say it again quickly. We saw the dip this morning at opening that our signals were forecasting and that a lot of people were anticipating, with September being historically the worst month in the market performance-wise. But then right at opening, things were kind of bought up and the market was trending higher. Now, actually, in the last 30 minutes or so, we're seeing that kind of getting faded again. So just how are you feeling after a long weekend? I don't think you were thinking about stocks much this weekend, maybe with your birthday happening. So another happy birthday to George for everybody in the chat. Let's get some happy birthdays. But September is upon us, and we're expecting the volatility to return. So just what's your latest thoughts on what you're seeing in the signals and the market?
It's looking pretty bearish, right? I think, obviously we got out in front of this a little bit. I wish I had swung the portfolio a little more negative yesterday. I probably will today. I mean, right as it sits now, we're six long, 9 short, so that's pretty good instead of 7 and 9. But yeah, maybe I wish I had taken a little more risk off heading into this week where they were. But as I explained in the letter, we've had some volatility, right? We had volatility in QQQ net option sentiment, especially. So I didn't want to I think I oversampled the positive on Thursday. I think that really hurt our weekly returns. Didn't want to do that. Didn't want to then swing the other way and oversample the negative when we were just talking about basically one day of really bad QQQ net option sentiment. But now that we're seeing that extend a little bit, I definitely want to swing more bearish, getting an updated QQQ at 4. Net option sentiment, SPY is at 0. So yeah, that's, we're getting pretty sustained there. Might as well gear up for a bigger, bear run here, I think.
And we got a happy birthday to G Money from Standard Deviation in our YouTube comments. But I want to ask you, George. So
Thank you.
Can you pinpoint the cause or the main reason for the bearish trend we're seeing? Is it the collective consciousness of the investors of the market just being like, September is a bad month, we've run a lot, it's time to take profits? Or is there like a more like black and white, like real reason that stocks are dropping right now?
Yeah, I mean, we were going to have to move up these highs eventually, right? What it did, I don't think there's a single event. We've been talking about it. I think, the thing that we've been watching and kind of waiting for the correction around is I think inflation is looking a little stickier than anyone would want it to be. And I think that complicates the situation a little bit. That's what I was looking for. I do also think just the market doesn't like uncertainty, and the idea that these, tariffs, might face legal challenges. I think is, doesn't like, the market doesn't like that uncertainty. And you might say oh, didn't the markets hate these tariffs originally? And aren't we worried about prices to go up? Yes. But, I think when you look at this, I don't think it's going to be as simple as the tariffs going away. If they're challenged in court, they might be removed for some time. I think the Trump administration would look for other ways to put them in. And I think the market doesn't really like that doesn't like the uncertainty around, I think, the fact that, this might be a problem that is an ongoing situation, might make us an even more confusing trade partner. I know that a lot of places have started to like stopping to ship packages to the US and all that stuff. So I think that that's the big risk, right? There's already like, I think, less trade coming into the country, I think, because of these tariffs. But I don't think we're going to get that trade back if the tariffs are challenged. Then we also lose the revenue. So I think that's kind of like a worst case scenario beyond just the uncertainty. But I do think that is just something that made the market even more sensitive. I think this is just a general correction.
I saw a really terrifying chart this morning of inflation of the 1970s, where there was like, I think the worst in recent history besides our current bout. And there was a double top of inflation, but the second time was even greater than the first. And this was over like half a decade. And they overlaid it with today's inflation, and it's following it like to a T, basically. Do you think there's any chance that like we haven't seen the highest levels of inflation? I think what did it get to, like 7 or 8%, like right after COVID? Do you think there's any chance we could see those type of levels or higher again? And like how low of odds would you give that?
Yeah, I mean, I'm concerned, right? Like we're already seeing inflation be a little stickier than I think people want it to be. And then you throw in the fact that we're not even seeing the full impact of the tariffs yet. And everybody, we share this stat a lot, but basically, at the start of these tariffs, it's been about, I think mid 20% that's actually being passed on to the customer. And Goldman Sachs, came out and said they expect that to go to 70. So, anything else aside, right? I think we have reasonable expectations that these tariffs are going to impact prices, that is going to affect inflation. And then if you're talking about, a potential, for inflation to be going up, and then the administration kind of being intent on lowering rates, that could create a scary inflation situation for sure.
So you highlighted the like tariff news that we got over the weekend a little bit, but can we just go like more in detail? Like, how likely do you think it is that these tariffs get like ultimately ruled to be illegal? But because I think it's going to the Supreme Court now, and then if they do or don't, what does that mean? And at the bare minimum, this has to just be adding uncertainty to the mix. That's not good for people that are trying to invest. We always talk about the certainty that investors like.
Yeah, I mean, in terms of the Supreme Court, um, I would say traditionally, the Supreme Court is going to be pretty, um, I think, pretty limiting of rights that aren't, they're, kind of overall strict, constitutionalists, right? So I think what this court ultimately challenged was, um, if there was justification to make these, right? But I think we're seeing an increasingly, partisan court. So in an increasingly partisan court, I don't know, right? I think that makes it like harder to odds make. I think you'd really like to do it well. Not only would you have to say, well, how partisan are we talking about here? And that I don't know the answer to, but I think it's easy to say, like, kind of on both sides. We've been seeing more, party line Supreme Court, and more jostling for getting your people on the Supreme Court than I think, was the case before, where it was much more just like, I think the nominees tended to be more on the neutral side. I mean, with some exceptions. But B, we didn't see the nominee preventing things like that, like kind of the gamesmanship that we're seeing, more of now. So it's hard. If you were going on, like, I'm sure that would be an interesting question for Perplexity, like on an issue like this, how have these judges, voted in the past? But I think we're kind of in new territory in terms of, this Trump administration, especially like the president expanding, powers past a lot of what we've seen. So I think it makes a very tough thing to odds make, but I think the uncertainty is a bare event in and of itself. Because like I'm saying, at this point where they're already in force, I'm not even sure, for the people that said like tariffs aren't good, I'm not even sure if those people would still say, well, now that they're in force, if pulling them back, like, even me and I, like, I don't think, I was pretty consistent. I don't think they're a good idea unless we had better manufacturing plans to immediately replace, some of what the kind of protectionism of a tariff is going to kind of do. I don't think we had the manufacturing in place to really capitalize, like fully capitalize on the impact of like what kind of those like protectionist policies do. So like, I didn't really see it at the beginning. As a result of that, I would have been much more in favor of them had we had kind of a better, setup in terms of a lot of the manufacturing being prepared to step in, and fill that gap. But having said that, like I said, I'm not sure now if I think pulling them back based on, all of the setup that we have and like kind of the economy and like our trade policy and everything, all kind of like adapting around them. I'm not sure if pulling them back, even as someone that didn't really love them in the first place, is the right decision. So I think there's a lot of uncertainty, over that too, which is that like, even if you weren't in favor of the tariffs originally, I think, for stability, which is very important in, trade, economic situations, like it's important, right? Because like, let's say, for example, someone is starting to build manufacturing, more in the US, and that's become part of your policy, or you at least start to do that, right? Maybe you haven't broken ground, maybe you've started to make your plan, but then the tariffs get pulled back and you said, well, is my business going to get killed? Can I keep going with this production until this tariff situation sorts out? Because like these same businesses might undercut me on price just as much as they were before, just as much as I didn't want to manufacture here, but before there were tariffs. So I think that puts us, I think the uncertainty not only around how the market responds to it, but potential uncertainty of them getting pulled back, I think in and of itself is a problem, even as I said, if you didn't think the tariffs were the best policy originally.
So the deadline I saw for this to be ruled upon was October 14th, so about 6 weeks away. It sounds like you're saying like maybe if they were ruled in favor of, so the tariffs remain, it wouldn't really change the market because the market's pricing it in. But if they were ruled against, maybe the market would drop just because people don't really know what to like make of the situation at that point.
Yeah, and especially because like if they're ruled against, um, I mean, in the Supreme Court, it's kind of tough, but even in the Supreme Court, I'm not sure if they're ruled against, that means the situation's over and like there isn't some other law that, the Trump administration has locked and loaded to try to like reinstate them. We also don't know, like there's been some tough talk about not like, the courts being, an obstacle in good policy, right? So we don't even know, if there's a ruling and ultimately the courts are ignored, right? So I think that creates a lot of uncertainty. And like I'm saying, even if you're planning around the tariffs and building them, and it's going to affect everybody. And like I said, countries are not going to change their policy if this just one ruling happens. And even if they were, like, it's not necessarily, you can't just go back to the old ways, right? Like if people were sending certain things in their supply chain to America and they've since said, I don't like the prices there, I'm going to send them elsewhere, they're not just going to switch back on a court ruling. So yeah, it becomes a pretty tough situation to predict. It becomes a pretty tough situation, to adapt to here for our businesses, for our trading relationships. um, you know, I think that the courts have an important role in this country, right? And I don't think that they shouldn't have ruled against it for economic stability. Like ultimately, it's their jobs, to determine, what the right, it's supposed to be a check. The judicial branch is supposed to be a check on, the executive, on the, what is it like this, on the congressional. I don't know if that's the official like constitutional thing, right? So it is important that they do their jobs. So I'm not saying the court shouldn't have ruled against it just because it might not be great for our short-term trade relationships. But if ultimately the Supreme Court says, that the president does not have permission to create these tariffs, um, it's going to be bad for the market. But that being said, like one of the things that I didn't also realize, and I'm wondering why this isn't already happening. Maybe it's in the works, right? The Republicans do have Congress, right? They do have the House, they do have the Senate. Why the tariffs haven't already, with this ruling, haven't already started to go through to get approval, like that would seem to make sense at this point because Congress does have the power. The problem is the executive order, but Congress does have the power to implement these tariffs. So you kind of wonder why this hasn't already happened. And, it might be what we're talking about. Maybe there's a lot of confidence in the Trump administration that the Supreme Court rules in their favor here. And that would make sense there. And if that's the case, this is over pretty quickly because I think until the Supreme Court hears it, I don't think there's going to be any changes to the tariffs, but it's a certainly interesting situation to watch. And I think until it's sorted out, a bear event.
Can you fire Supreme Court judges? No, I'm just kidding. All right, we can move on from tariff talk. That was pretty good though, and it was making a lot of headlines. So in-depth coverage of it probably good for a lot of our viewers. But
You can
moving on
certainly
to
try. Like, you're not supposed to be able to fire anyone on the Fed either. And we saw that happen. So, who knows?
Mhm. Only half a joke, but PepsiCo jumping today after a headline came out that Elliott Management took a $4 billion stake in the company. And I've seen this time and time again now where a headline comes out that Elliott has taken a position in any said company and the company jumps. I want to get your opinion on Elliott. When you see a headline come out that they've taken a stake in a company, does it make you take a second look at them and feel better about the future of it? I know they're very active, so maybe how you say Warren Buffett always kind of like fixes the companies he's investing in by, working with the business. I think they do that too. So just what are your thoughts on Elliott and when they invest in a stock?
Yeah, I think there's some of that. I think there's some perception that, if you have a smart shareholder, not only might they help with the management, but they also might bring in other shareholders. And I think the thing about Elliott, Warren Buffett, value investors, right? There's confidence for a reason, right? Because value investors, right? I don't know what it's trading at, but maybe we should use real numbers here. What's the company again? Sorry, I'm just talking about Elliott.
PepsiCo.
Okay. Right. So like they buy in at 150, let's say, or they buy in at 151. It limits the floor, right? Because value investors, if they like something at 150, 151, whatever, if they like it at that price, they're going to keep liking it as it gets lower, right? That's what you can count on with value investors, right? So it helps your floor, right? You can bet that Elliott didn't deploy all the capital they'd be willing to. And if they like it at 150, they like it more at 140. And I think that's a difference between, when I will look at the holdings of stocks all the time, like what hedge funds own them, what's buying, what's selling, right? And I'll tell you the difference in, some of these signals, right? When I see like a really smart hedge fund, like 0.72, maybe like 2 sigma AQR, those are some of the ones who I respect the most, think they're the smartest, right? But I don't necessarily have a lot of security in them, right? I think it can be, I think it's kind of the reverse of what I'm saying. I think if I see a stock that one of those places has and it's down, say 10%, right? I'm going to assume that they might be out of it at that point. And whether I know it or not, I'm going to say I think they might be out of it. But it's the reverse for a value fund, right? If Berkshire buy it, if something like Elliott bought it, actually, it's the opposite. I have more confidence in the thesis if it went down. I'm not worrying about them bailing. Like, I know the value investing mindset is that they will buy more. So, especially for a stock that you think you're buying because you think it might be near the bottom, seeing a big value name like that is huge. It's going to help it rally because it supports a floor of the stock. And that's just not the case for even smart hedge funds that are investing. Like, I'd actually be worried that a lot of funds are out on even a 5% loss for a stock because they might move on to something that has better momentum. That's not necessarily the case. It's just the complete opposite thing where it's just like a stock starts to go down and I see a smart hedge fund in it. I immediately say they might be out, maybe they're probably out. And it's the opposite for a value fund where I'm just like, they're probably in more, thinking about getting in more if it's down. So I think that highlights the big difference. And yeah, that's the other thing. Those other hedge funds are going to be more data driven, more transient. Maybe they'll have some tips for you on how to manage your company, but like I said, they're more likely to leave a situation than to be like, we're in this together, let us help you manage it, right? Whereas not only are those value investors buying more, they also want to help, they also want to get their hands dirty and say, like, let's figure out how to help you manage this better, get a better perception around the company, and improve the return, improve the revenues, profits, etc.
It's interesting that there's such different strategies that you just laid out of like your favorite investment firms that you follow, and then like the others like Berkshire and Elliott. Could you talk about like what are the like those two strategies? What are they prioritizing that makes them so different? Like, is one like prioritizing long-term returns and the other one is short? And then which strategy do you like better, or do you like a blend? How do you feel about that?
It's completely different. I mean, I'm obviously closer to that first hedge fund strategy, right? We have a quick trigger finger. We are very signal driven. It doesn't matter what else is going on. If we see certain signals change, like it doesn't even matter how much we like the company. And that's the big difference, right? When a value investor is buying in, they're saying, throw out all this pricing noise, right? We think the company can grow revenue over the next, couple years of 20% and improve their, profits by 20% as well, right? And they're saying when that happens, the stock price will catch up, right? They're taking a longer view. So yeah, that's the big difference. One is basically, and I think the real difference of that is one is validating the importance of price. And that's what we're always doing. We're just saying, hey, we might have liked this, when the price, price, net option sentiment, all of these kind of momentum dynamics were going up. And when that changes, there's other things that we can jump in and say, okay, these pricing dynamics are now much better than this now that the situation is flipped. We're always talking about comparable stocks, whether it be in the same sector or anything like that. We just want to switch very quickly and make sure the momentum is lining up and the options markets are seeing value, right? That's why we churn a little faster. But it's just two very different approaches. Both of them are good approaches. I think for most people, the value approach is going to be much better, but that's why we always encourage people to just integrate our process as part of that process, right? Value is going to be a much better fit. But if you're playing some of this momentum with us, especially if you have some risk off assets, risk on, you're going to do a lot better, especially if you're selective around that and you make sure you have a process and it fits with the rest of your portfolio and the risk of your portfolio, et cetera. That is just going to, it's going to improve your reward profile while you can still risk limit. But we've seen time and time again, right? Especially in bull markets, like value works a lot better in bear markets. But we've seen in we always say there's a lot more bull than bear markets, right? And especially like as the government has on both sides propped up the stock market more, that's become even more true than it once was, even though the government always tried propped up the stock market. I think it's become a lot more overt. But in that situation, value, you're going to be getting lower. You're going to be getting lower returns in some of this momentum. You see it time and time again with what we do, whether it be, Meta, like longer, even the longer term things we do. Coinbase last year, we had a lot, Palantir this year, right? Value says those aren't good picks or weren't good picks. I mean, maybe a little more with Meta, that's value than the other ones. But especially like if you look at some of these, Coinbase, Palantir, value said it wasn't good, and yet those stocks are really going to beat the value picks. But you still have to balance, you still have to manage risk.
All right, so I want to spin to another stock that I would not have ever heard of had it not been for the Prospero signal. So the ticker is CYTK. Cytokinetics. They are up as much as 36% today because they announced a more effective heart disease drug that they are developing. And I just wanted to bring it up because I felt like it was a good shout out to the Signals, a company that's probably not on many's radars, and it's looked. I think it's even popped on our short-term bull list. I think that's how I've seen it in our app before. What I also like to do, which I don't think I've mentioned before, is beyond the short-term bull list in the app. I love going into the search tab and just browsing like the upside highest stocks on there and then the net option stocks, because sometimes it's even different from a lot of the time there's different stocks in the short-term bull list, so you could see really like a wide array of stocks that are looking good in the signals. But this stock is up a lot today. Its signals have kind of actually dropped a little bit. They're in like the 70s and 60s now for upside and net option sentiment. So would you suggest waiting, if you're interested in this stock, to buy it at this point after the big pop?
Yeah, definitely. I mean, 76 net option sentiment isn't bad. But yeah, I don't think the signals are like, especially with this suddenly look bearish looking market, like 76 net option sentiment isn't enough. I saw it this morning and it was even a little lower, but no, I think there's better picks right now. And I mean, anytime a stock has run so much in a day, I do always worry that the next day is not going to be, is not going to be as good. And like, that's always one of the hardest things to odds make, right? Because that's almost pure algorithm, right? I don't know if algorithms, like after a stock goes up 20, 25%, if they're going to think it can keep running, or it's due for a correction. And the truth is, they might not know until they open and start playing around with each other and testing the levels. So that's why those things are so tough. But
The
like, yeah, I mean, unless it had like 90 net option sentiment today, I wouldn't even consider it because of what I said about like the potential price volatility.
Um, Everybody knows the algorithms kind of like drive the market, but I feel like they're kind of this like mystical thing, like nobody knows how they operate. Do you have any idea of what factors the algorithms you were just mentioning like are looking for, or like deciding how they're going to move bullish or bearish when they see a stock like you were just saying?
Yeah, I mean, I think some of it is quite known, right? Where it's like, we've worked with a lot of institutions on things like this, and I think some of it is quite known. They're looking at the same kind of things we are: momentum, what's going on in the real-time options markets, things like that, and that's known, right? What's unknown is, like us, everybody's got their little different flavor of assessing the options markets. So we might be reading it, very different than various hedge funds. So that's thing one. I think thing two, and where it gets to be very unknown, right, is these algorithms don't just have an opinion on things. Part of their opinion, especially when they can throw around a lot of money, part of their opinion is seeing how much they can move a price, right? We've talked about this before. Like, before a company takes a long position, or before an algorithm takes a long position, it might very well see how much it can drive down the price with shorts, or vice versa, right? Before it takes a short position, it might be pushing up like the price just to get it as high as possible to see when it starts to feel that resistance. And then it might short, right? So you never really know what the algorithms are doing, what they're thinking in terms of like this. You might call it like a price elasticity test, right? And the really tough thing about it is, we're talking about some algorithms that care more about like options dynamics, right? But there's some algorithms that are pure momentum. So, like, walk with me here for a second. Like, there might be some algorithms and classes of algorithms within a fund that is actually buying a stock because it's interesting and shorting it. But if as it buys that, it actually sees that it's breaking through the selling resistance, you might actually have very different pure momentum, pure price algorithms say, I actually like the momentum of this now. So algorithms that were looking to, find resistance and then short might ultimately be, overpowered, outvoted, just have money come from a different pocket of that fund that may say like, oh, actually, when we bought this, like, or when us and others bought this, we sent up the buy, like we broke through some resistance levels, and now we actually think it's a really good pure price momentum play, right? So there's so many different kinds of these algorithms, and like I think that's the important thing to understand. Like even within the same hedge fund, you'll have different algorithms that find success in different ways. So it's actually that dance that I'm talking about that's very, very difficult. Like you might and the funds themselves don't necessarily even know how some of these algorithms are gonna, play out, ultimately win, until they kind of like duke it out themselves.
I think that's fascinating stuff. I would love if you could be able to like actually see that stuff happening. Like, I don't know, the different battles and micro battles of different stocks in the market would be cool. Um, but I want to ask you, George. I I think I spilled the beans, but I asked the chat before you were in the stream to guess the secret stock of the day that has outperformed Palantir and Nvidia on a 5-year time frame. And let me pull up the photo chart I have to give you guys the numbers. Um, the stock is Build-A-Bear Workshop. So I doubt anybody, unless you came across the same story I did, uh, knew that this stock had outperformed. So over the past 5 years, these numbers were from last week, so they could be a little bit changed now too. But Build-A-Bear is up 26,000%. Nvidia is up 1,274%, and Palantir is up 1,602%. So insane. I guess Build-A-Bear, let's see, 5 years ago was 2020 coming after COVID. So I guess people were pricing them to be non-existent at that point, and maybe the stock just has survived and soared since. Um, but would you have ever expected that Build-A-Bear could have outperformed those kind of companies in a 5-year time frame?
Yeah, I was actually looking. Um, I was like, well, that's 5 years, but zoom in on the last year. Well, yeah, the last year, Build-A-Bear is up 78%, Palantir is up 415 percent. So I mean, sometimes you can zoom out too far. Build-A-Bear actually beats Nvidia over the last year, and that's kind of funny. But yeah, sometimes you can definitely zoom out a little too far. I don't really care about 5-year charts that much, but it is impressive that Build-A-Bear has beaten Nvidia. But like, what's its like? Let me look at this. P ratio of 14.32. I mean, that's yeah. I mean, Build-A-Bear does not look like a bad buy. I wonder if it's. I'd be interested in like looking at this further and seeing like how Build-A-Bear does and like bear like dig deeper on this Nvidia comparison and see how much better Build-A-Bear can like weather a bear run. But yeah, it's definitely interesting. I mean, we talk about it in terms of like, you never know what a company's like, mode is, their sales. They seem to have a really good situation, and it's kind of funny over the last year that they're better than Nvidia. But what I will say is, and let's look at, are they in? I think they're in Prospero, right? I don't
I don't think
see.
Build-A-Bear is. But what I wanted to
You
say
should
was
add
like
it.
I could
Yeah.
I think this performance in the story, it'd be like you'd be like, oh, it makes sense if there was one of these like viral Build-A-Bear moments where it's like, oh, they caught the culture for a little bit, but they've kind of done this like under the radar. Like you don't hear anybody talking about Build-A-Bear. Or there's no like social media like hype about Build-A-Bear, which is I think even more impressive that they've done it without that kind of like wave of like people really, getting interested in it or going viral or whatever, something like that.
Yeah, I wanna get it added to Prospero because I'm definitely, who knows, maybe this whole time Build-A-Bear would have looked great in the signals. But I think that's interesting. I mean, some companies, it's like back to the value story. Some companies are just like profitable, growing, stable. And yeah, you always want those you always want it. It'll be interesting. We should definitely look into like how it does on bear runs. But yeah, like a good portfolio has that balance, right? Where you're not only talking about this all the time. You can't only go for tech growth, whatever. But yeah, it's definitely something that is a good way to balance your portfolio to have other things like that in there.
Comment from Merle Kalis on YouTube. That's ridiculous. First of all, it's a mall-based store and malls are getting a lot less traffic. And actually, I want to build on that comment too, because I was going to say, I feel like Build-A-Bear's TAM is tiny. Like there's only so many people that are going to want to use their business that when the stock is performing well, it's not one of those stocks where you could project growth forever, can you? Like there's a real cap of their business, I would think.
Yeah, but like when I looked at them, right? I was saying that uh I mean, I don't know if they'd be vulnerable. I mean, if their sales grow, like we got to look into this more, but if their sales grow, I would say no. Um but yeah, um if Build-A-Bear it says they're expanding internationally, right? So there is always like more of a market. The question is like when it gets saturated, like what markets, like that kind of thing. Um, but yeah, I mean they're in. I'm looking at this. They're in Australia, Bahrain, Canada, Chile, Colombia, Denmark, Fiji. That's an interesting one. So yeah, I mean, there's always more malls, right? And it would be interesting, like sometimes these markets get saturated and it's not as good. But I mean, looking at their chart, um, there's not huge downswings. Let me look at the 5 year. Like there's little corrections. But like I'm saying, I wouldn't be surprised if these corrections were like smaller than tech stocks. And yeah, I mean they clearly like for a chart to go like that, they're continuing to open in new locations and they're doing well. And I'm not sure like those places I named, like if they can support a store in Fiji, like I could think of a lot of places that they could expand to.
All right, so we'll have to keep our eyes on Build-A-Bear stock, and this is one of those stocks we've updated like every 3 to 6 months. So we'll see at the beginning of next year how they're looking. Uh, I want to turn now to another possible buy the dip candidate stock. So STZ Constellation Brands, the maker of Corona and Modelo and many other products, is hitting 52-week lows and 5-year lows after they slashed their 2026 outlook. And you were speaking recently about the buying the bigger dip of companies, kind of like Lululemon and UNH. Would this one now fit that? Are you interested? They've just had terrible performance for many years now. So what do you think about STZ?
Let's take a look. Let's look at their chart and then in Prospero. So STZ, oh, not a good day today. Um, yeah, I mean that chart's looking real bad. Um, let's take a look in Prospero. I mean, not terrible in Prospero. Maybe it's starting to see value. We're starting to see some volatility um, in net option sentiment. I mean, we are like actually a good amount of volatility. So it looks like, we're seeing kind of those algorithmic tests that I would say there of like, well, like, does this still have more time to go? Like, typically when we start recommending a stock like this, what we'd see is, um, what we'd see is, um, net option sentiment starting to solidify and go up a little bit, as the market started to see, a lot more stability. But I think what we're seeing there is a stock that like the markets don't see value in yet. I mean, that might change, but if the options markets don't see value and that net option sentiment is still on like the lower end, even as hard as it's gotten hit, I wouldn't necessarily short it, but I don't think it's time to go long either.
It's an interesting thing. I think they just connected some dots for me. So when you see a volatile net option sentiment like time graph in Prospero, that is a sign that algorithms are testing like which direction the stock is going to go. Because I've seen that before, and I've never thought that. I've just been like, oh, why is it so volatile? But that could be the
Testing,
algorithms.
swing trading, like especially if like there's not like if you don't have a lot of like long, especially not net option sentiment, if you don't have a lot of longer term views, right? Because remember, net option sentiment is anywhere from like 0 DTE all the way to 6 months, right? So we do that for a reason. Some stocks, if they have like a larger population of stable, holders, buyers on like the back end of that time range, then you're going to have more stability in that option sentiment. But if you don't have a lot of those kind of people that are saying like, okay, I like this 4 or 5, 6 months, I'm going to hold a little bit, maybe not huge positions. But if you have a lot of, swing traders trading those options, there's swing traders on everything. Whether it be, live hedges of positions, especially if it's long-term, positions that might be held of something, or shorts, hedging the other way if the market is moving fast. Yeah, I mean, what that tells you is there's not a very stable view of the value of the option, and there's not like a lot of consistent open interest in it that like stabilizes that option sentiment more. So yeah, I mean, I always say every signal is a signal. Sometimes people ask me about net option sentiment, like, what happens if they're thinly traded options and that causes volatility and this or that. I'm just like, that's great. I look at a chart like that and I say, I don't want to own it either way, because these algos have no idea. Like, they have no idea how to properly test the sensitivities. There's a lot of swing trading in it, which means, it could move like 0.5%. And then everybody, oh, like now I think it's topped out at up 0.5%, up 1%. Now we're going to start, buying puts, right? There could be a lot of range sensitivity there. So yeah, like I always say, every signal is a signal, right? And even a confused signal is something that I just say stay away from. Stay away from those volatile net option sentiment charts, long or short.
Good color there on that. I think that's useful to our viewers. I wanted to bring up gold on the stream today, and we don't really talk about like the charts specifically of stocks too much, but I think gold is a particularly interesting one if you look at the ticker GLD, because it had hit the same level about 4 or 5 times since April and been rejected every single time, but it's currently breaking through that level now, going higher. Are you interested in gold at this moment? I know, we like to play momentum. It seems like gold might have some momentum in it. So how do you feel about gold? But then also, it seems like gold is kind of the hedge to the market. So if gold is ripping and breaking through and getting momentum, is that even a more worrisome sign for the overall market?
Yeah, I mean, I think the problem with like anything that's run as much as gold, you start to have like, I worry about it as a hedge, right? Because it is the first thing that gets hedged, but anything can be in a bubble, and anything that goes out, like I would look for, we've talked about this before, like rare earth minerals. Like I think those are a better hedge, because that those are going to have a certain value, right? And even if the market turns a lot more bearish, they still have a certain value. And I look for value floors like that. The problem is, like gold, I don't know what the real value floor is. It's become so run. Whether it's like, I think people, some people really like silver as opposed to gold, just because it doesn't necessarily get as much like overpriced, and it's still like, it has like a stabilized value. And you could even say like if there's tough economic conditions, like maybe it's not like a market hedge as much, but maybe people, silver becomes a better alternative than gold for some applications, not others. There's some like, specific, applications of both gold and silver that are irrespective of like, value, jewelry, that kind of thing. But I always kind of have the same answer with gold, which is just like, I don't really know the extent that it can run farther when it might be viewed as being in a bubble versus like a very good hedge. And I don't like, as a general rule, I don't like hedges that could also be bubbles. So I think there are better materials hedges for the market in terms of the stability, right? All that being said, because gold is like the obvious one, it is kind of like the safest in terms of like the most likely to do well. But there's that risk if there's economic problems, but there's that risk side, right? There's other stocks that might not have the same reward in tough economic situations than gold, but have a higher floor. And I think silver is, one of those.
Well, if gold is a bubble, stocks are a bubble, real estate's a bubble, if everything's a bubble, Is anything a bubble? I think so, maybe. Still.
Or everything's a bubble and like save a few things, right?
Yeah. We have time for one more topic on the stream today. We've had over 2,100 viewers in the stream, so thank you everybody for tuning in after a long weekend, and we went live at an unusual time. We usually live Monday 11 a.m. and Wednesday 3 p.m. So thank you everybody for finding us today. Hopefully you've enjoyed the stream so far. Like it up if you have any last minute questions you have. Feel free to mention in our chat before we do our switch over after this topic. But George, I want to ask you because it seems, I don't know if you'd say high probability, but more maybe it's looking slightly more likely that we'll get a pullback. If this pullback in the markets does come and things are down 10, 20, 30% from their highs, especially the stocks that like have led the markets and people have been, wanting to invest in and been excited to, particularly in the AI area of the market, which is one of them that you'd be like, okay, if I see this stock down 20, 30%, like it's a buy, like it's on the top of the list for long-term stocks, especially in that AI area, which is kind of driving everything at this point.
I mean, you see Palantir doing pretty well today, even in a tough market, right? And I think that's always the first one that comes to mind, right? I think there's a reason that Palantir ran as much as it did, is it's in a very good position, right now with this administration. I think long term with their position, like beyond the administration, the way they've like, put themselves in a lot of these like high value, whether they be, defense or even some of these, other, important like consulting hybrid relationships, whether they be Fortune 500s or whatever. Like that is the first one that comes to mind. I mean, I also like, we've been adding CoreWeave more. We exited it today mostly for risk management. I also like CoreWeave. Like the closer it gets down to its IPO price, the more I like it. I think it's like, I think that that's something that, I see it hitting a floor because of all the retail attention, right? Because people like, these stocks become teams. And CoreWeave has like got a big fanatic team because of the IPO and because of how well it does. Retail has a very hard time letting go, and institutions follow retail. And that's, one of the reasons why CoreWeave is on our radar, even though we don't think it's good value. Like we can see it getting momentum at various times. Those are the first two that come to mind, right? CoreWeave is having a hard day today, but like, I think we might see it bounce. I'd look to add it again. It's down at like 92. But yeah, like I could easily see, like let's go back and look at like the IPO. Yeah, I mean, it IPO'd at 33, so I don't think we're going to get back down there. But yeah, I mean, I think I have a hard time seeing it go below, 70, 60 without it, bouncing. Obviously, we'd want to look at net option sentiment on that to like zoom in on that a little more. But those are the first two that come to mind. I'm already thinking about adding Palantir again, just because like I don't think it's ever like for the same reasons we talk about with CoreWeave, all the retail energy. Like I think it only gets to a certain price before a lot of retail, a lot of momentum, a lot of algorithms start to say like, hey, this could be ready to turn. And I think it's like it also like I think a lot of the war stuff has died down a little bit, but I don't think you could ever underestimate something as a hedge. Like, we're never like, we're never too far away from some scary war headline, right? So I think that like that's one of the reasons that like we talk about it time and time again. You do have more downside protection on a high risk, high growth stock from, international conflict defense. Let's talk about let's talk about it that way. So that's one of the reasons, like I would say beyond the, we're kind of breaking it down like for an AI play. We're kind of talking about different things, right? We're talking about retail fervor, and like we like stocks with retail fervor because those are the ones that can snap back even in difficult markets, right? You start to just get too many people saying this is a good price. Hedge funds are tracking that. It's ready to go in the other way. They're looking at social media. They're ready to follow on if they think it gets enough retail fervor. And then we also have those two important, we have that government stimulus, right? And this government has shown, whether it be, what it got in the bill, in terms of spending for, for ICE or anything that it views as important, government things, even as it's cutting a lot of other expenses, like those are going up. That tells you something about where the government wants to spend, right? And then you have that added, if we're entering a risky, bearish market, right? And you have that added protection of of maybe if there's a war headline, this growth name doesn't get hit as much as other ones. Maybe it even goes up. That really, I think, why Palantir is the most interesting long, I think, if we see more of a correction.
Well, as we've been on the stream today, the markets have headed back down towards the lows of the day. So it'll be interesting to see how you manage the model portfolio in just a moment, with our net option sentiment also being still at 0 and 4 for the SPY and QQQ. But we'll do the switch over.
Yep.
All
I
right.
will see you on the other side.
All right, sounds good. Everybody, stick in the stream. George will be right back in the Prospero.ai lab. I see Yesh Subs comment on YouTube. You actually were at a Build-A-Bear 20 years ago. I don't think George can hear me when he does the switch over, so everybody keep the secret. I'm going to see if I can make a Prospero Build-A-Bear for next stream. That'll be hysterical, but we'll see if we can get that done. I don't know if you can customize them or not, but that'll be funny. We'll surprise George. But let's take a look at the overall markets at this very moment. We have the VIX at, it's retesting the highs of the day. It's right there. It's over 19, currently at $19.15, up 18%, almost 19% today. The QQQ down 1.77%. SPY, Dow Jones, and Russell all down a little bit less, but also hitting the lows of the day again. Let's take a look at NVIDIA, the stock that is weighing so heavily on the markets. Let's see how they're doing. Okay, so this could be the culprit. NVIDIA is now down 3.65% on the day at $167 per share. It's now at the lowest point since its earnings have been revealed. So NVIDIA in the red. Is Bitcoin still in the green? Bitcoin is still green today, so it's hanging in there for the meantime. Took a look at, yes, so all of the Magnificent Seven stocks are still in the red today. We're seeing a bit of a tech sell-off as of right now.
Okay. Let's see what we got here.
So it looks like NVIDIA could kind of be the culprit for why we're heading back towards the lows of the day, George. They're now down almost 4% today.
Good thing we got out. All right. Let's get this ready. I think we also are definitely going to do, maybe we'll start out, what's our screener right now? I think we did a bear screener on Friday. We just forgot to set out an alert for it.
NOS dump bear.
Yeah, I forgot to send out an alert. But we'll do something new, just so, if people are looking, they can see that. We will do that first. Let's just get that up and running. All right. Sharing the screen. All right, let's do, I also want to do this. And just while we're here, we like to be efficient. Yeah, large cap growth is getting killed. We probably should have leaned on that a little more given Friday, but now we will. Now we've got like a clear signal, but you never know when it's going to snap back. Okay, let's do this. Wait, that's not what we want. Okay, that's what we want. Interesting. No, that's not what we want either. All right, where are we going wrong here? Technical flow. Oh, here we go. This is what we want. Took us a second there. Yes, that is definitely what we want. Oh, DNA, a stock that we used to like. Look at that. Lower. All right, this looks good. All right. People will have to let me know when they see it in the app. And we'll go back down to this.
Clear signal away from large cap growth here. We will have to respect this move and get rid of large cap growth. Bulls and into bears. No surprise here to see tech where it is. Lots of bear opportunities, but we see some good bulls in utilities, energy, consumer defensive, and healthcare.
Okay. Oh, I set everything up today pretty well, but
Screener updated.
all right, we're doing lots of stuff. Let's get this. All right, we did that. Get to see under the hood on these characters. Character limits. All right. Sending this. Then we also want a move score report. Oh, okay. That is some big changes. I think I'm still only going to get rid of one of each. Oh, damn. Okay. All right, how much do we have? 41, 49, okay. Oh, it's just... okay. Okay, that's even. We definitely want to add more bears than bulls. Okay, let's look at definitely that. A lot of Ryans down here. Black rock, that is interesting. All right, I think that's a pretty big hack we're taking there. Let's see. MSTR. That's interesting. No, I don't want to do iron. All right, we're going to diversify there. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. And then we have 1, 2, 3, 4, 5, 6, 7. Do we have anything else? What is this? All right, I feel better there. Oh, look. I should like this better.
Oh, did we send this? Yeah, okay. Let's look at the screener and see if there's any ones that we don't have. Interesting. Let's take a look at some charts here. We want to get this right. Do we have any open Hertz positions? Actually, that's pretty easy for me to check. Yeah, we do. All right, maybe we want another one. Maybe we don't want another one. Okay, what do we got? Let's check some of these. Theme. Chemicals. All right, theme. Let's check out the trend. No, for those that I just took a look at theme, and net option sentiment is in an uptrend, so don't like it. I'm not sure I like any of these. Let's look at NFE though. New Fortress Energy. I kind of like that downswing. We're pretty heavy on energy, so I'm going to get into that. All right, how about this? It's Vero Pharmaceuticals. Oh, that's just, it's too small. We don't really want to go short healthcare. But let's see, Virgin Galactic. Interesting. Oh. That is a very interesting 30-minute. Are there anyone know any news about Virgin Galactic? We're going to keep our eye on that in terms of the investing letter. But all right, so boy, we're looking very red. What are SPY and QQ unit option sentiment are at?
Let's see. SPY is 0 and QQQ 4 still.
All right. We're going to get this out at 12:30 even to make Brent's life a little easier. All right, and now let's take a look at this. We definitely want to make some changes. Ooh, that's ugly. Although I do believe we got out of core weave on a win with a win this morning, so less ugly, but still not pretty. Okay, those are definitely looking. Oh. LEU. What's LEU in an option sentiment right now?
LEU is 94 currently.
Yeah, not time to get out of that yet. How about PPTA?
PPTA is 71.
How does that look on the time series?
It's down from a high of 86 recently, but it is making higher lows, higher highs.
We're going to keep our eye on that. I don't feel great about it, but I don't necessarily want to get out this second. We have some old positions here. Long in the tooth. Okay, nothing to see here. Oh. All right, I do think we want to get out of ARCC and ON and get into better shorts. I don't know why AR, I mean, I guess it's net option sentiment is heading up. Yeah, it just doesn't look like the best short right now. What about ON? Downside did head up at open. I don't know what's going on with ON and momentum score. I'm staying in it. But I do think I'm going to get out of ARCC and add some other Lamb research is looking bad. But we're going to get out of that. What's going on with Ryan? Okay, Ryan looks good. How about MSTR? Okay, wow. Oh, all right. What is going on with Bitcoin? Bitcoin might have blown up. Okay. I think I definitely want to do all of this. What about VAC? I've had VAC spin on me a few times, dude. That looks good, though. Let's see the trend. Yeah, VAC. All right, there are moves. We are going to exit. Exit ARCC, enter Ryan. LRCX. That. Actually, I want to look at one more. I want to look at ANF next to that. Maybe VAC and ANF. And then MSTR long. I like this setup. to do this. I'm just taking a look at QQQ. It is finding a little more resistance. Okay, we're still going to do this because we're entering more short. So like MSTR covers us on the turnaround. All right. All right. Any questions? I think that is everything.
No new questions from our chat, but we did cross the 2,500 viewer count, so that's pretty cool. Dr. Carter's in the chat. Love George's camo pattern he's wearing today. A shirt shout out.
Thanks, Matt.
We'll be back live Thursday at 3 p.m. this week instead of Wednesday. So see everybody then. We'll see how the market moves until then, and we'll cover the latest things going on at that point. But thank you, everybody who viewed. Thank you, George. One last happy birthday to you. Welcome to 40. We'll see you on Thursday.
Thanks, bye-bye.